Yes, you read it right. Nifty 50, which probably is your favorite and is a favorite of almost crores of Indians, is actually keeping you poor. In the next 10 minutes, I'll prove it to you with data, and I'll also suggest you a better index to invest. And just to prove it right now, look at this graph. You see this red line and this blue line. This is the graph from 2005 to 2024. Tell me, where would you invest, in this red line or in this blue line? I am pretty sure most of you would have chosen this blue line. Why? Because it is clearly beating the other red line. And if I tell you with numbers, if you had invested 10 lakh rupees in this red line, which actually is Nifty 50, in 2005, your 10 lakh rupees would have grown to 1.1 crore in 2024, which is almost 11x, a great return in the last 19 years. But if you had invested in this blue line, which is a different index, almost same level safety, just like Nifty 50, if you had invested in this index, again 19 years back in 2005, again 10 lakh rupees, your amount would have grown to 3.1 crore. A difference of 2 crore in the last 19 years. That too on investing in an index which is equally safe, almost equally safe like Nifty 50. I hope by the end of this video, you will get a great perspective about all the other indices that are available in the market, and you might want to reconsider changing your SIP from just Nifty 50 to this magic index. Let's begin. Before we begin, let's go back to our original topic, which is index. If you still don't know what is an index, how it is made, please watch this video. I've explained in detail what are these indices, what is Nifty, what is Sensex, how they are made. Please watch that video first before you watch this video. For this video, let's go to nseindia.com, which is the official website for NSE, and let's understand what I'm talking about. Now, if you go to nseindia.com and you click on market data, you would see this option called as indices. If I click on indices, you would see the first option, which is broad market indices. Now, these are all our historical indices, which is Nifty 50, Nifty Next 50, Nifty 100, Nifty 200. All of these indices are based out of market capitalization. I've explained that also in the previous video, but just for the context, market capitalization is number of shares into price of each share, which is the largest companies of India. And basically Nifty 50 is the combination of top 50, the largest 50 companies of India. And similarly, you have Nifty Next 50, Nifty 100 and 200. If I scroll down, you would see sectoral indices. Now, these are the indices based on a particular sector. For example, we have Nifty Bank, specifically focusing on banking sector. We have Nifty Auto, specifically focusing on automobile sector. Similarly, you see a lot of other indices here as well. If I scroll down, you see strategy indices. This is the magic I was talking about. Now, let's click on strategy indices and see what exactly is this. Now, if you look at what NSE India says, it says Nifty multi-factor indices are designed to reflect the performance of a portfolio of stocks that are selected based on a combination of 2 or more factors selected from quality, value, alpha and low volatility. And this is the magic I'm talking about. All the historical indices are based out of market capitalization, which is basically picking the largest companies. But do you think the largest companies are generally the best companies to invest? Probably no, and the data proves that. In fact, these strategy factors are much better than that market capitalization. If you look at the options available here, it says Nifty Quality Low Volatility 50, which is a combination of quality and low volatility. And there's a lot of indices in strategy, bucket as well. I won't confuse you with all of them. I'll just tell you the magic index I'm talking about, my favorite, where I've been investing a lot of money, and I would literally push you to do more research on this index. And this is an amazing index, much better than Nifty 50 to invest in. And the name of this index is Nifty 200 Momentum 30 Index. And this was the one I was talking about in the beginning of the video. If I click on this index, I click on OK, you would see more information about Nifty 200 Momentum 30. And look at this. Nifty 200 Momentum 30 Index aims to track the performance of 30 high momentum stocks across large and mid cap stocks. Because it is picking stocks from Nifty 200, that basically means we are picking from large and mid cap sector as well. And then it says momentum 30 high momentum stocks. And how it is this defined? It is based on recent 6-month and 12-month price return adjusted for volatility. Now obviously you might have a lot more questions and understanding about why this is made, how this is made. For that you can see this. We have a fact sheet along with on NSE India, we have an index constituent, we have a methodology, and we have a research paper as well. If you scroll down, you can also see sector distribution. You can see automobiles, 22.87 is automobiles, 18% is healthcare, and like that. If you scroll down, you can also see the ETFs and the domestic index fund listed on this index. Now I can explain all of that to you in detail, and that might make this video a bit too long. So instead of that, you can read these research papers. I can give you numbers, the numbers that will literally have you more confidence in investing these stocks. So let's talk about numbers, why our momentum index is better than Nifty 50. So basically I have removed the data for the last 2 years because we saw a huge bull run in the last 2 years, and a lot of people might feel the data has got biased because of this recent bull run. So I'm excluding the data for the last 2 years. I am considering the period from 2005 to 2022, these 17 years. So just to remove a bit of the bias. Out of these 17 years, our momentum index has outperformed Nifty 13 times in these 17 years. Only in 4 years, it did a bit worse, that is in 2008, 2009, 2018 and 2019, just 4 years. Remaining 13 years, every single time it has outperformed Nifty. And when it also lost was a small margin with which it lost. If you also look at the 5-year period return, look at this. 2006-2010, Nifty 50 gave a return of 16.7%, but our momentum index gave a return of 17.4%, beating Nifty 50. From 2011 to 2015, Nifty gave just 5.3%, but our momentum index gave 15.5%. In 2016-2020, Nifty gave just 12%, but our momentum index gave 16.4%, which basically means in all these 3 5-year periods, Nifty 200 momentum 30 has outperformed Nifty every single time. In fact, if I talk about the overall numbers in the last 17 years, Nifty has delivered a return of 13.5%, but our Nifty 200 momentum 30, it's a big name, has given a return of 19.5%. That's almost 6% more. So you can consider Nifty 200 momentum 30 as Nifty plus FD combined, and that is the power of this strategy index. And this is exactly I was telling you in the beginning of the video. So basically, if you had invested 10 lakh rupees in Nifty 50, in the last 19 years, it would have grown to 1 crore. But if you had invested the same amount in the momentum index, that 10 lakh rupees would have grown to 3.1 crores. A difference of 2 crores in the last 19 years. Imagine if you had run some SIP, this difference would have been even higher. Now, I know you might have a lot of questions because I am literally questioning Nifty 50 right now. So take your time, absorb this information, read more about these two indices, and I would highly recommend you to reconsider investment based on these two options. I would highly recommend to look at your SIPs and maybe transfer a bit to Nifty 200 momentum 30. But before doing that, please talk to your financial advisor and only then take the decision, and do your own research as well. I hope you like this content. I hope you like the video. If you did, please like the video, please subscribe to the channel, please share it with more people, and I'll see you next week with one more interesting video. Until then, keep investing. Thank you. Bye-bye.